Hey there, Emily from XY Advisor here with a quick introduction to this week's brand new podcast. Mark Hoven, CEO Wealth of Advisor Ratings, stopped by the studio to have a chat with Adrian Paddy from XY Advisor this week. They actually had a really broad conversation, touching on Mark's impressive and rather non-linear professional career. A lot of what they discuss is also quite relevant to the recent release of the Royal Commission's final report. They touch on the number of advisors leaving the industry or switching licensees, and Mark actually highlights a really great question, which is part of the reason Advisor Ratings are now looking to roll out an initiative to rate licensees and not just advisors. They discuss the role and future of robo-advice, the current restrictions advisors are faced with in delivering their best work, and a classic Adrian question: is tech the answer to all advisor problems? And sorry, no spoiler alert, you will have to listen for that answer. It's a well-rounded conversation with a healthy dose of humour, and we really hope you enjoy.
So who is Sunsuper? Well, if you haven't been living under a rock, then you've probably heard of them. But just in case you have been, they currently hold the salubrious title of being the only super fund to be named Fund of the Year by no less than 5 different rating organisations in 1 year, including Champ West and Super Ratings. They've grown dramatically over the past few years and today have more than $58 billion in funds under management and 1.3 million members, making them the 5th largest fund in the country. These accolades and growth in part can be attributed to their strong and clear focus on delivering the best retirement outcomes for their members. And because they're a profit for members fund, all the profits go back into the business to improve the products and services they offer to clients, including registered financial advisors. In addition, their performance is strong. Their balanced investment option has outperformed the industry average over 1, 3, 5, 7, and 10 years to the end of September. And to top it all off, they're a really great bunch to work with. So take the time to find a bit more about what they can offer you and your clients by visiting sunsuper.com.au/advisor.
Welcome to the podcast, Mark.
Thank you. Good to be here.
Oh, I think it's fantastic to have you on. We've been, sharing a lot of ideas about what's been going on in the industry over the last few months between XY Advisor, Advisor Ratings, and you guys are doing some really cool stuff.
Oh, thank you. That's very kind. What do you want?
No, that's it. That's it. I was just trying to prep you up so you're happy to be in the interview. Now I'll just beat you up through the rest of the 40 minutes. So Mark, like you've come through a bit of a journey, I guess, to get to this destination, which is quite different where you've been, where you are now.
Done lots of things. Yeah. You're talking about my non-linear career path.
Oh, well,
Are you talking about Advisor Ratings' short history?
Well, I guess that's quite a non-linear path as well. No, I'm talking about before that. So, some of the things you were doing before, because you've been across various landscapes.
Well, I used to be an engineer.
Yeah.
I used to be drilling oil wells in Bass Strait, 3, 4, 5 kilometres under the ocean floor. Very technical world.
Diving?
No, it was all from you stay dry on the platform, drilling down through the ocean seafloor. But
was it dry? Like no beers on the
very, very dry. Yeah, it was some time ago now. Back in the old days, old technology. And things have changed a lot. But
do they still have oil down there?
Yes, not so much though.
Okay.
Not so much. Yeah, I arrived as they call peak oil in Australia, or Bass Strait at least.
Australian peak oil.
It was downhill from the moment I arrived, and
that's when the huge oil industry of Australia just started to descend.
Absolutely.
Did it coincide with global oil prices going down at the same time?
Well, no, they'd been rising. 1987, they stayed up, but peak oil. So there's only a dribble coming out of Bass Strait these days. Most of it's coming out of other parts of Australia.
Oh, there's lots of dribble coming out of Australia, depending on who you talk to.
That's right.
So is that when you decided you had a bit of a pivot to another destination?
Big pivot. Yeah, I'd 10 years in the engineering industry, oil industry, and pivoted into financial services. It just looked a little more interesting, a little exciting. And it was, I jumped out of engineering into stockbroking, sell-side research, and that was truly the Wild West. compared to the safety, relative safety of a...
Was that where the research got made up after you got told you had to IPO something? Or?
Oh, no. I never crossed that line.
We're after the statutory time frame.
Yeah, there's a bit of a grey line there between absolute, equity, sell-side equity research and research to support raises. But I never saw that line. Others may have, but
you just got told what you need to write a research paper.
That's right. Well, I was relatively junior, so I wasn't. I didn't get anywhere near some of those deals, but I was just trying to make head nor tail of the copper industry and whether BHP was a buy or sell. It was hard enough.
Was it? Did you ever land on some good speckies?
No, not really. I got the safe sort of bulk miners and base metal stocks. No, this was just heading into the internet craze, year 2000, where stocks were about vaporware. The more vapor, the more successful, the more money you could make, and
all about a good story.
I was out there pitching, industrial, mining stocks.
Not very in favour relative to an internet stock.
No, not at all. I was in New York in early 2000 when it was probably at its peak.
You were a part of it, right?
Well, in terms of marketing, so doing research, you would generally go out and market it to institutional investors. We did tours of the States and Asia, pitching to institutional investors who were, these people were focused on mining, global mining. And why
they'd be like, do you do any internet mining? Or
no, well, they were working with colleagues, of course, who were buying the vaporware stuff. So, we all felt a bit left out. We're
not that
we're
cool,
old world. We're selling old world, and our colleagues are working on this really cool stuff that's got something to do with something called the internet. You don't need revenue to be successful.
Isn't that a good story?
But everyone believed it. I mean, I lived in that period. Everyone believed it. Everyone bought those stories.
But I guess things balanced out over a few months after that.
Yes, that's right.
Well, you came back on top. Oh, we've got revenue. Our stock price is stabilised.
Well, of course, 2001. It's funny, my career, which has changed a few times, has been buttressed by major global disasters. So I joined the oil industry when the Exxon Valdez occurred. It spilled oil into Prince William Sound in Alaska. That was only months after I started my career.
Oh, okay.
I joined Standard & Poor's after my very brief stockbroking career, just months before the 9/11 event.
What got you into advisor ratings then? Because you guys have been exposed to a lot of other startups well,
absolutely. We've just, nice lead in there. We've just launched our, we're calling, it's a horrible term, but our robo-register. We've just launched that last week. 36, B2C, direct-to-consumer, digital solutions, most of them are actually not advice solutions. They're budgeting tools and investing tools. But so yes, that's been really enjoyable working with those startups. I mean, they're truly startups. We are too. We like to think of ourselves at Advisor Ratings as being more scale up now, but it's a far cry from my working life, which has been largely in big global.
Oh, that's been pretty exciting. I'm
loving it. Cutting edge. I mean, we've got a great little team. You can get stuff done. You can be really responsive. You've got no excuses actually not to be highly responsive to what you're hearing. When customers, clients, partners, and in our context, I'm talking to advisors, licensees, consumers, obviously, because we have an interface to consumers, and of course, all the manufacturers, all the vendors. I'm talking to them all the time. They're interacting with us all the time. You can truly be responsive. Unlike a big machine, an organisation that information goes in one end and it's like Chinese whispers. 20 people process it through an organisation.
And as long as nothing actually happens at the end, they've done their job.
Well, if something happens, it comes out looking very different. I'm trying to think of those cartoons, the 10-legged stool or the swing that doesn't swing from the tree any longer.
I could think of some more appropriate ones, but they're not very nice to say.
We're very rare and kind to the big institutions, aren't we?
Hey, we try to be nice to everybody, but they bring it on themselves sometimes. But what was the adjustment like? Because you think about that sort of cultural difference. It's how was that change for you? Was it just like, oh, I can actually just operate like a proper person now. I want to do something and something happens, and did you just feel freedom?
Well, I think ever since I left Exxon, I've been getting closer to this role in the sense that, moving into sell-side research, you are every hour of every day you're having to come up with ideas and research and content that's saleable, that someone might believe, and then pitching it. And you're even though you're working for an institutional brand, I was with BT, you're essentially pitching your ideas. It's your brand, and so you're living and dying by what you produce every day. And ever since then, moving back into sort of more corporate roles, they've still been startup businesses inside the sort of security blanket of a big institution, but it's truly startups, and I've pursued those. So jumping into advisor ratings, it's not that foreign. Mm-hmm. Don't have access to the same level of resources, and there isn't the safety net, if you like. If you get it wrong, you really, it could be company destroying, business destroying. So
is that what makes it more exciting?
That keeps you. Oh, absolutely. I mean, it keeps you sharp. I've never really suffered from, I think, a lazy eye. I think I've always been really focused on what's important. But boy, it sharpens your attention in a
especially like some of the conversations you're having with like people that are very directly related to the legislation that may come out in the future. It's definitely a fine line to walk between advocacy, I guess business interests, and then like trying to balance, because you guys a lot of people would go, oh, well, if only I got in front of these people to tell them what it's like or what it is. I'm presuming being that close to some of these conversations doesn't make things, you don't feel any more able to solve some of the problems as maybe people that aren't at those conversations.
Yeah, there was actually several things in that question. It's a really interesting question, actually.
I like to load them up.
I know. I'm trying to think which one I'd tackle first. I think it is a difficult balance. We're like we're a marketplace. That's how we think of ourselves as advisor ratings. A consumer today, it's what most people can see as a consumer marketplace where we bring consumers and advisors together, like a bridge to the industry. We're increasingly building out our footprint into marketplaces with advisors and licensees, between advisors and vendors, around the education space. These are all sort of things we're working on. And by virtue of that, we're having conversations like you led, with a number of interesting groups. I mean, we've been talking to, we work with ASIC. Clearly, we take an ASIC feed. I mean, the core of our data is coming from ASIC. It's important, I think, that we show the best data. So we've had conversation with ASIC about how we're improving their data. We've been talking to Treasury about the things that are going on around the Royal Commission, as they're talking to lots of people. We talk to other stakeholders like the industry associations, always staying close to the FPA and AFA, the SMSFA. We've been talking to a range of groups, actually. One of the things we're rolling out are ratings on licensees, right? We started this work, we'd like to think we're original here. We started this work before the Royal Commission. Before the Royal Commission sort of pointed out that there probably needs a little bit more scrutiny placed on the way these businesses operate.
It's really smoothed out that the friction that advisor ratings originally had, because there's quite a bit of pushback originally about these sort of concepts, because don't tell everyone like what we're like.
Yeah, well, see, when you've the way I like to say to people, when you've lived at a rating agency like I did for 11 years, Standard & Poor's, you believe everything can be rated. You truly do, even though, at S&P we were rating, obviously, bonds, credit ratings on bond issues and stuff like that. I was running a business that was rating fund managers and managed funds, but it just gets into your blood and your DNA. And as I was leaving S&P, the last thing I did, sort of just doodling on the train and with some spare time on the way out, I actually wrote criteria to rate financial advisors. Now we were a long way away from.
Was that your CV going off to Angus?
Well, I didn't meet Angus for another 5 years.
Oh wow! So what was on this piece of paper that?
Oh, it was a classic S&P piece of work. It was overly engineered. I mean, it was several pages long.
When Mark says it was a piece of paper, he actually meant an Excel spreadsheet.
It was a piece of paper
with macros.
It was a piece of paper. I always use a notebook. It was a piece of paper. But, so I've lost my train of thought. It was about, having everything can be rated. So I always had a view when I joined Advisor Ratings that we needed to do more to sort of bring a very confusing and fast-changing world into sharper focus. And while we have customers rating advisors, we have our own rating on advisors. I felt that we needed to improve the rating on advisors. We need to increase the depth and intelligence and perspective from consumers rating about, and we needed to rate something that wasn't being rated, which are licensees. And again, I think we've been vindicated by the Royal Commission. And in building out this service, we've been talking to all the stakeholders that I've mentioned and many others.
It's nice just being the people. We just look at the data. You might not like the data, but that's all we're looking at here.
Well, as much as it can, it needs to be objective like that.
Yeah,
and
exactly.
It really does. I mean, the data speaks, right? But you've still got to do some interpretation.
Well, it's like that sell-side research sometimes, isn't it? It's like some of the algorithms, if you just play around with them.
Well, if you're going to do the work, you've ultimately got to differentiate good from bad. I mean, there's no point doing it otherwise. Otherwise it's a complete waste of time, everyone's time. We're trading. There's a continuum of good to bad in everything, right? And measurement is just about separating that. And so that's what we're aiming to do.
Has there been what's your perspective on what was important when you started in the role to now? Has that changed much?
Well, the realities of running a business as opposed to running a consumer marketplace. So
I mean more in terms of assessing advisors, like what the metrics were around that. So if you think about that original sort of
criteria that I wrote,
you came up with.
Well, I definitely think to ultimately rate to create a better rating on advisors, we must do what we're going to do, which is go up and rate the licensees first, okay? Because I think our view is that a significant component of the rating we're putting on the licensees, the best way to describe it to people, because everyone wants to know what the criteria is. Well, we haven't written the criteria yet. We're still at sort of the big sort of moving parts level. But I say we're trying to assess, is the licensee creating the right environment for an advisor to do their best work in the best interest of the client? I mean, that's essentially, we're doing an environmental assessment. And if we've got that right, then we know the advisor's got a really good chance of doing good work. We think majority of advisors are doing great work, are trying to do the right thing, have the best interests in mind, but they're also somewhat hamstrung by the services that are being provided to them. When I say hamstrung, that's got a negative connotation. They are significantly dependent on those services, right? I mean, if it's technology, if they're poor, then there's not much they can do about that other than move, right? And we know they're moving in high numbers.
Yeah. Well, actually, what do those numbers look like in terms of acceleration of migration between licenses?
Yeah, well, it is accelerating. So, I don't have the latest and greatest numbers, but certainly, the way I think of it, so we had, put it this way, sort of year to date, so to where we are today in 2019, advisors are moving sort of about 30% per year. Now, when I say 30%, I'm talking about, we sort of see there are 24,000 registered advisors. We think of there being like 20,000 active advisors. So 30% of those 20,000 are moving. Now, they're either leaving the industry or they're changing licensee. And it's about 2-to-1. So for every advisor who's changing licensee but staying in the industry, 2 are leaving. Now that is up by 50% roughly on the last 3 years. So it is really stepped up.
And we're just about to we're on the cusp of the education changes, I guess, as well.
Yeah, well, I think the people are front running those changes. This probably really picked up sort of back end of quarter 1 this year, and then really just absolutely took off through the Royal Commission hearings in April. I mean, clearly we're hearing from the Royal Commission that FASI is going to be biting harder than it ever did. The introduction, not FASI, FOFA. The introduction of FOFA several years ago led to acceleration of exits. So from 15, 16, 17, we saw a rate of departure from the industry that was several times higher than the years prior to that. So FOFA already drove exits. Now we've got a combination of FOFA being more diligently applied, combined with FASIA being rolled out.
Public
we don't know what form.
change.
We don't know what form, but all those things are now combining.
It's probably one of the biggest unknowns going around.
Absolutely,
people are probably more sure about what the Royal Commission's going to come out with than FASIA.
That's right. The known unknowns, something like that.
We know the Royal Commission's going to be nasty, whatever comes out of it.
Well, I mean, I worry about with so much change impacting our industry. The one thing that concerns me is that at a time when we all want certainty, right, because we're all running businesses, even if you're an advisor running your own business, you're running a business. And if you're a practice owner, if you're a licensee, if you're a vendor servicing the market, if you're advisor ratings, I think we all got stuff to do, right? We want certainty, whatever that might be, changing our value prop, recoding our platform, changing collateral, getting some education. We just want certainty. I just really worry about what might happen if we have a change of government next year, and what that will mean to the kind of legislation that's going to be put on hold.
Well, you're going to get there's going to be the recommendation that comes out, and obviously interpretation at that point in time, and then there's the chance, if it is a change of government, for how that's then taken on.
Yeah, I mean, I don't want to be a doomsayer or a scaremonger, but it just
essentially you're saying plan for the worst, aren't you, mate?
Well, I think you should always do that. That's something I've learned going into startup land is plan for the worst, hope for the best.
Plan for longer time frames, maybe. Yeah.
Yeah. Well, no. You live and die by the minute in a startup.
Okay, plan for short time frames, but don't be surprised if it takes longer than was intended.
Yes, that's what you're trying. Yeah. I agree with that. That's right.
Try to do everything really quickly, and then if it takes longer, then
you've still probably overachieved, right? Because
exactly, it's all relative.
It's relative to I don't know what it's relative to a big institution.
Yeah.
You're still moving a lot faster.
Yeah, all it takes is talking to a couple of friends that talking a bigger business, and all of a sudden you're like, okay, it's not
puts
too
it in
bad.
Perspective. Yeah,
I achieved.
Makes you feel better.
I didn't go anywhere, but I went further than
they did.
Than they did.
Or if I tried the same thing in their world.
Yeah.
I'm being reminded by that all the time. I think it's interesting, when you're, because I'm talking to all the big organisations, fund managers, super funds, life companies, and you're constantly reminded. You'll see people in those organisations. I was them. I was that person, and to get decisions made, as much as they're trying with their best intention, they've still got this massive apparatus behind them. It's the reality of institutional life.
Whether
decision making,
whether it's
slow.
Government or
it doesn't matter.
Commercial,
Exactly, it doesn't matter. It's just I like an agile world. I like you're being able to move quickly. Yeah.
Oh, you're in the right spot for it. What do you think's gonna if you could? You're across a lot of things, and I understand it's anything you may say is it's obviously quite a sensitive thing with some of the discussions you're having. But what do you see as some of the recipes for really giving that certainty again, or settling things down and achieving? I guess there's a lot of intent with all these changes that have come, and the intent sometimes is not what it's sort of pertained to be. So the intent is sometimes to actually restructure things for certain reasons. But if you take the intent to be a better financial advice industry or profession, what are some of the things that you would just pull out that maybe you could simplify the thinking around this space?
We sort of need one of those crystal balls here. I think...
the reason you're on is because I thought you had the answers.
No, I think I always keep in mind the fact that the governments of the day, are trying to appease voters. In an advice context or a wealth context, they want to improve access and affordability to advice, right? And advice in the broader sense of it. I think as a industry of people who are delivering advice, we know the industry is only servicing a small part, right, of the community. They are by nature invariably high net worth, self-managed super funds, and the industry has designed itself around those people, right? But there are so many people beyond that who could benefit from some kind of help, and I use that word help carefully as opposed to advice, and I know there are lots of advisors trying to think about ways of re-engineering their businesses. I've seen some amazing businesses, typically young millennials, setting up businesses that are incredibly focused. I went to one of your events, niching the niche, I think it was called.
That was a great one.
I thought it's fantastic.
Yeah.
Really focused on being something to a group of people, a customer group, or being online only, for instance. It's that specialisation that's going to help them be successful businesses. But I think it's going to if that continues, we're going to start servicing groups that aren't being serviced today, bringing them in, and it could be bringing them in online. So, bringing them in, opening that funnel by sourcing people who have traditionally not been touched by advice, sourcing them through online channels. That's why we launched the I hate that term, robo-register, is to improve the funnel to bring average Australians to the table.
Or engage with their money.
Engage in some way, so it could be cash flow and budgeting advice. It could be, advice around debt, reducing, consolidating your debts and paying down debt. It may have nothing to do with investing. It might be post-investing. It might be transition retirement, finding a nursing home, aged care, pension. All these sort of specialty areas that are not necessarily about investing money. So I think
definitely.
it's accessibility, affordability. That's what's, I think, informing Royal Commission, informing Treasury, who's advising Royal Commission, informing the kind of way in which legislators and government are thinking. So building trust by removing conflict, improving affordability, improving accessibility so more people get helped.
Well, I think...
And what's the ultimate outcome of that? It's unloading pressure on the public purse. It's removing, it's reducing pressure on Centrelink, it's reducing pressure on age pension. It's all those things, right? They're the long-term
payoffs. You'd think that sort of stuff would be talked about a bit more often because that is the outcome.
We never get that far, do we, in the conversation?
No, it doesn't. I've put things together. I remember I went for some sort of competition years ago and I was like, well... Yeah, the reason I did a bit of Cancer Council pro bono work, and I'm sitting there, I'm going, this is too late. Like these people need help.
Yeah.
But it's after the fact of when they should have had cover, and then all the dependencies going on the system.
You're mopping up.
And I was like, I hated it. I literally hate it. Like you're helping people, and these people needed help.
Yeah.
But. It's just really you can see the system failing there.
How do you get ahead of that? That's I think the thing that, and it may not be the traditional advisor whose job is to do that, but I think again it's not the panacea. I do like to talk about this online community of solutions, tools and stuff. It's clearly not the panacea, but it's a great start. And the more creative people are out there designing these things and solving specific problems, we can maybe start getting ahead of some of these sort of pervasive
What do
issues.
you think about government incentives for financial advice? Yeah, that's always been one of my ideas. I'm like, they give it for everything else. You get solar.
You mean tax deductibility?
You get money.
Yeah.
Well, that's one.
Yeah.
That's probably the less direct one.
Yeah.
Still a good idea.
Yep.
That's the closest I think we could ever get to something. But even more than that, you get grants for solar panels, and that's saving that's saving some stuff. It's saving greenhouse gases. It's So
Like about that one.
hey, we're talking about public policy, utilitarianism, the benefit of all, and if we get people with the right amount of insurance cover in place, even if you just scope it to that, like it
Could be. Yeah. Well, look.
I'm not going to get you to hang your hat on anything here, right? But just throwing it out there.
Getting into public policy.
Absolutely. I'll do more of the talking now, so you can stay out of trouble.
I think tax deductibility is a good start. I don't know. How effective is that? How well known is it even? Again, if people aren't even aware that they need help, don't know how to get help. All those blockers for getting advice, I don't think I'm worthy of it. I'm not smart enough. I'm not rich enough.
Yep.
I'm not earning enough. I don't trust the community. I wonder if they knew if they had a tax deduction around that, they might.
People love a tax deduction.
Everyone loves a tax
deduction. I'll tell you what, you never get that much engagement out of it. It makes you want to think about being an accountant because, that's when they get excited.
Yep.
Get me more money back from the government.
All that work you're doing around deductibility of uniforms and, travelling to and from work and keeping logbooks and stuff like that, the help.
Some get financial advice.
Some well-placed. There's a new advertisement angle. We've just come up with a marketing strategy.
There you go. Hey, well, the government's got to come along to the party on that one. But what I would say, I see the challenge that's occurring is that the breadth of what advisors need to cover is too broad for what is possible without super duper magnificent support around them. And that is the issue that I think advisors in the profession deals with compared to other professions. Closest is probably doctors, but they've got support. A lot of them, they've got infrastructure around them. A lot of advisors are operating, closest thing is a licensee. There's a lot of differences in what comes out of licensees and support of advisors. And even just if you look with support infrastructure, you're communicating with people and your reference point is so broad that I just don't think it's possible to really, if they continue to refine, it's in conflict with making advice more accessible.
Well, I think it's...
Not directly, but indirectly.
It's interesting, isn't it? Because as we're sort of setting up to rate licensees, we're starting to dig into, the way these businesses are structured. We're getting into how they're changing right now, how they're adapting their value propositions to advisors. And so you're seeing different types of responses, which aren't necessarily things that have just happened now. They've been working on them for some time. But to your point, the advisor needs more support than ever in some ways because you're right, it's a complex world. You've got to be across so much. This goes back to the specialisation again. If you're niching the niche event. I remember some of the speakers, were one gentleman was just doing life insurance. Yeah. The niching was more around a segment of client type, but provide them all kinds of advice. It depends how you want it. But that's trying to minimise the span of control or the level of areas that you need
breadth,
to be, breadth that you've got to be technically across. But I'm also seeing in these groups, and you'd be familiar with this, the kind of coaching and support staff that are now being introduced to some of these dealer groups to, for instance, coaching around advisors being able to mentor their clients, goal setting at the front end, skills coaching around running your business, skills coaching around running, a technology platform, a software platform. So there's more people and costs being pumped into helping and support the advisor doing their job, their day job. I don't know where it ends.
Do you think? I do think technology is the answer to all the problems, in one way or the other, and I think it's the only thing that can actually help close these gaps in human capability, whether it's gaps from an individual standpoint or gaps in an organisational support standpoint in terms of when we're talking about organisations working towards, with the number of people involved, sort of a lot of chefs in the kitchen, not quite getting there because it's challenging for people to work together sometimes.
But that's, I agree with you. And the technology is exploding. I think, I really like the net wealth report that they produce on all the largely B2B technology solutions, SaaS solutions, their back office, middle office, and increasingly front office in helping an advisor engage with a consumer, a client. And then there's software that connects the software, project management, workflow, and it's an extraordinary universe growing, and they'll continue to grow. We'll get 10 of every type of tool and software, and so navigating that, again, that's a challenge.
That's a job in itself.
Working out what do you need in your business. There are 5 pieces of technology that you need. Again, I remember an advisor with one of these new modern businesses speaking at a conference recently, and they reeled off 10 different technology tool sets that they were using in their business, and quite surprising, I knew all of them. But I would imagine for most people in the audience, they would have never heard of them.
There's some big gaps.
That's the future, and I think it's not going to solve all the problems. I'm thinking, wouldn't it be wonderful if you, because that's essentially automating manual process, manual steps, physical steps, paper-based systems. I was thinking, wouldn't it be wonderful to also have a robotic replacement of a tech services team?
Yeah. Well, I reckon that's
but the
not
tech
too far
services
off.
team maybe don't think that like that. But isn't that one of? I mean, you're an advisor. Isn't that one of the most challenging areas? Is staying across the it's the knowledge piece, right? It's what's the latest legislation,
the changes that have come
these
through.
nuances, the changes, the nuancing in the client need, and it's
I
like
wish-
an
I
online
wish it was
Wikipedia
more-
that it does it for you.
I wish it was more about the technical sometimes, because that I think that's more understandable. But when you look at what a lot of advisors, the state of affairs in terms of what they are more concerned about, it's actually, and you're probably getting it come through in your data. It's just, are they doing the right thing by compliance? And it's purely because, and these are great advisors that have been in the great thing for a long time, and they don't know what the right thing is to do.
Yeah.
They don't know if they do this one thing, what's going to happen, if they're going to get completely screwed by some sort of little rule down the track. And that environment is not very good for an advisor to be showing up and giving the best service to their clients and building a great business. Like, it's a climate of fear.
I know. I think there's going to be a lot more scrutiny too, more than we're already getting, right, by the regulator ASIC on best interest test, safe harbour. And so technology, you said it earlier, I think you're right, the systems have to make it foolproof to ensure compliance. And of course, ASIC and the organisations who are licensed are increasingly compelled to be able to report real time on compliance. So it's not this, 12-month rear view mirror sampling rate of 3%, 5% on SOA compliance. It's real time. I mean, it's a paradigm shift. So you can only do that with technology.
But you think, I just get frustrated about how much effort's being gone into this retrospective sort of checking process. Why don't we just have better technology to actually do it at the time?
And it sort of takes the soul out of the the art.
How about all this amazing technology that's been designed to, and they poured millions into it to like retrospectively check things. All we needed is the right stuff up front, and then you wouldn't even have to worry about that.
Yeah. Well, again, I think some of the investment in people who are helping coach the right behaviours are about trying to get ahead of the curve, trying to be proactive. So advisors are not allowed to fail. So there's the technology, which is more a checking mechanism, real time. But I can see more effort going into trying to school and coach advisors to do the right thing. Even though they're trying to, some of the places they fall over are very technical. I mean, they're very technical, right? I mean, ASIC service, shadow shopping, identifying something like 90% of advice that was shadow shopped wasn't compliant. That's a very technical. That's a definition at law. Not compliant, but and it looks bad, right? The optics
they're not the best
are terrible.
stats.
They're not great stats.
Not great headlines. Like it's.
But I feel, and I don't know, I haven't looked at that work, but I feel that behind that are people trying to do the right thing and deliver advice in the best interest, but they're falling over on a range of technicalities that they can solve, that they need to. They need to take the action to solve it, and change that headline.
Well, I think I'm sure in your past roles and whenever you had a problem in the business, you'd probably go, what went wrong? What was the process behind that was an issue? And I think the source of a lot of, I guess, the solving of these problems is also, it goes down to process. And
I'm an engineer. I love process.
Yeah.
I'm going to agree with you.
I think there's a few guys out there and girls that wouldn't mind having Mark in their business as a compliance manager or something.
Oh, so. No, don't do that. I know some really good compliance managers. I don't want to be one.
Well, I'm sure there's always
I think you've got to have a great compliance manager. They're your best friend.
They are, yeah. You just don't want to spend too much time with them. But
I have always kept my compliance managers close to me.
They'll tell you what's up.
Well, we had when Standard & Poor's post the global financial crisis became rating agents became licensed. They weren't licensed
because
before.
of the credit defaults.
Everything that came out of the GFC, credit rating agencies became licensed.
Yeah.
So there was a massive investment in compliance staff.
Was it actually a big change, or?
Oh, it's huge.
Yeah.
They hired massively accounting staff. So like the accounting forensics. They were being used around criteria development, tighter criteria development, but a massive influx of legal and compliance people, because essentially that S&P in all the countries that operate and all the rating agencies, not just S&P, were becoming licensed.
Is this when you really came into your own, when they go, there's more rules?
Well, the funny thing...
And the engineers just going... I like rules. Well, no, I can deal with them.
No. I thought the most ironic thing was that running a wealth business in Standard & Poor's, and we were the poor cousin. I was under no illusions around that. We were already licensed. We were licensed. We were this little entity inside S&P that understood licensing.
The
obligations and compliance. And in Australia, we were right across it. And then all my colleagues in the rest of S&P, Sunny, post-2009, had to jump into the future.
So did you take on a bit of a teaching role in that respect? Or?
I just thought it was an irony that the little business
Australia
was able to sort of share some stories and some sage advice.
That's usually the case. Well, Mark, thanks for coming on. Is there anything, I guess, next few weeks, there's lots of things happening. Anything you'd like to share with the community about what's happening at Advisor Ratings?
I think we're doing a capital raise at the moment. So
anyone want to invest? Is that
anyone who wants to invest? Absolutely.
Not retail, only wholesale.
Correct. Yep. And significant checks.
Yep.
Only accepted. But I think more importantly, the message being that we've got some really good momentum behind the business, and part of the funding is to roll out some of these new services. But really importantly, particularly for the advisors listening, we are continuing to invest in the business so that they can have a better experience on the platform. And part of that experience is bringing more consumer traffic, right? I call it the oxygen it's the lung to our business, is the consumer front end. And that's where we draw in the oxygen. The oxygen is our consumers. We want to bring a variety of customers, magnitudes more, orders of magnitude more consumers to the platform to find the advisors on the platform.
That'd certainly enamor advisors towards you a lot more, wouldn't it?
Well, they should be. I mean, they should be online. That's how people shop today. We're encouraging people, advisors, to build out their profiles. But we're going to deliver by attracting more consumers. So the capital raise is to invest in things like that, is to start spending some serious dollars on above and below the line marketing, SEO work, anything, partnerships, inside and outside the industry. So working with sort of luxury, good travel providers, seniors, car club, out of industry kind of groups to try and attract people to our platform to help with advice, digital or physical.
So anyone looking for clients out there, just Mark is doing his best to get them in front of you.
Yes, nice close.
Yeah, let's just run with that. Thanks for coming on, mate.
All right, thanks. Good on you.